Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. It is Saturday, August 15th, about 7:15 p.m., and we had another kind of wild ride in the market this week. Looked like we were going to break support, and all of a sudden, markets ripped back to the upside, and we've got more of that same game going on. Tell you what, let me take off. Let me make an adjustment here real quick. Take off the studies because the price action is not very significant here, so it doesn't show up real well while we're talking about it. So anyway, you can see here that we went all the way down to here, and our previous low, our most recent previous low, was right there. So we got pretty close, and I'm sure people were looking to change their stance had we broken this low right here. So now that the market's reversed, we're still not. Well, let me show you what I look at. I have to go to a daily chart though to show you. So let me pull up a 1-year chart and zoom in on that. So what I look for to kind of tell me whether the selling is over or not is I look for. Let me get rid of this thing here. What I look for is this low day, which would be this day right here. We put a box on that. And then I look for a close above that low day. So this would be the high of the low day right here. So we did in fact close above the low of this day. And the low is pretty significant. So waiting for this kind of signal is kind of it's not generally as profitable. But of course, if the market goes up and makes new highs from here, then that would be a fairly profitable run. I mean, you might have something that looks like this. Now, it doesn't mean, and then continues on, to higher highs. It doesn't necessarily mean, though, and this I want to be careful about this because I'm sure there's some people out there looking at, oh, well, we're going back up. But you could actually get, and this is one of the frustrating things about trading or investing in general, but you could see how we had a down here. Let me just kind of draw it in here. We had kind of a down, and then we had an up. Let's see how the up was lower than this high. What that means is there's still a potential for a down into, say, this area right here around 2077, 2075 or so. And then we could resume higher. In other words, even though we got a pullback here, well, we had a big pullback here, but then we had a rally. And then, the market has to breathe in and out. And so basically it took a deep breath in here, a little breath out, another breath in, and now it's kind of at a point where it maybe needs to breathe out again into this area here before going higher. But I think probably what we'll see the market early next week come into this lower area around 2075 and then reverse pretty violently upward toward this high over here. And I'm not sure you can actually see that on the chart. We would expect a pretty violent reversal to just above this high here around 2135. So next week's going to be a very interesting week. I mean, that could take, we have, say, Monday pullback, Tuesday, Wednesday, Thursday, Friday, all the way, and maybe finish up near here or maybe just shy of that, and then have the following week finish that out, maybe pull back a little bit, and then go again higher, maybe all the way up into the upper trend line area. So, in this area right in here. But I do expect this to take out the 2135 or whatever this high is right here. and get up into this DP and potentially even this upper trend line. So we could see 21, somewhere between 21.45 and 21.55 before it's all said and done, and that could take 2 to 3 weeks for all that to happen. So anyway, for those of you that are trying to decide what to do with your 401k, if you haven't sold it or brought it into cash yet, you might look for this kind of scenario to play out over the next 2 to 3 weeks. And then I think the pattern is then complete, and we're probably going to break down at that point, and at least test this low around 2030, 2040, and potentially all the way down to 1800 or so. So let's look at the. We spent a fair amount of time on the S&P 500. Let's look at the volatility index. Volatility continues to be very low and complacent in the market. You can see we spiked pretty high early in the week. Well, about midweek, and then we sold off pretty rapidly. And here we are with volatility back below 13, which is indicates a fair amount of complacency in the market. I know it seems like there's a lot of people talking about, this, they're bearish and blah, 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 but the people in the market, the people actually who make the trend, they're not bearish at all. In fact, they're very, very, very bullish. So I might be on the bearish side, and you may know other people that are on the bearish side, but what's interesting is the people in the market are extremely bullish. And the neat thing about the market, or the frustrating thing about the market, is it tends to get the most people on the wrong side and then whack them pretty good. So, sometimes I wonder, well, how could I be on the wrong, how could I be on the right side when there's so many professionals out there that supposedly, quote unquote, know? And the reality is nobody really knows. So, it's perfectly reasonable for me to be right and them to be wrong, or just the opposite. But I think you have to admit that we're much, much closer to a top than we are a new bull market. I mean, new bull markets don't start at triple tops. And let me show you what I'm talking about. If I look at like a monthly chart, let's say where we look at all data, and we're looking at monthly. Yeah, I really don't even. How come that's not? Oh, that's the VIX. I'm sorry. Let me go back to the S&P 500 and show you what I mean by the triple top. So let's pull up. This is what I'm talking about here. We had a top at 2000. We had a top in 2007 or 8 at near the same zone. And then here we are, slightly higher than these other two, but still at a place where there's a lot of resistance. There's a lot of, in other words, if you took a DP off this or you took a DP off this, we would be in that zone. Let me show you what I mean. Like if I took a DP off of these two, it would be kind of like that. And so we're in the thick of that. Of course, 1700. I mean, it's a wide area, right? So, but that's because we're talking about, and maybe it's not quite that wide. Maybe it's more like that. But we are talking about, very large. These are very large events, series of events in the market. So this triple top situation is a pretty serious situation. And now some people would say, well, this is a breakout, right? Because it is, by definition, it is a breakout. I mean, if you draw a zone here and you draw a zone here, the technical analysis would tell you the difference between 1600 and 760 added to the breakout point, which is 1600. You would see the market go to, what is that? Let's call that. Let's just call it 800 points. So 800 points onto 1600 is 2400. So that's telling us the market could go, another 15% higher here, 10%, whatever that is. And maybe it does, but I don't think so. We've got some patterns, some pretty significant patterns that are playing out here, and I think there's a pretty good case to be made for a significant level of caution at this point. So it doesn't mean we're not going to go higher. It doesn't mean that we won't go to. I think we're definitely going to go to 2145 or so, but it doesn't mean we couldn't go all the way to this 2200, at this trend line right here. So you just have to kind of watch it, keep watching it, and then pick your place and place your bet. So let's look at the interest rate market. Let's look at it on a weekly chart, since that's what we've been doing. Of course, by now most of you know the theme. What we're looking for here, same kind of deal. The high of the low, the close above the high of the low day, kind of thing. So here's the low day, pretty easy to spot right there. And you can see I had this line here. Now I drew that line just below this low here, and I don't know how long ago I did it, but I did it a while back because I was looking for this action here. Looks very corrective to me, and I was looking for it to pull back into this area, get this kind of ABC correction. Now, if we get a close above this high, so next week, if interest rates go a little higher, and let's say we get a bar that looks like, this, then I think you can say the intermediate low for interest rates has been put in, and we would look for rates to move to at least this area here, and I don't know what that area is. Let's take a look real quick. That would be about the, let's call it 2.575 area. So we would expect interest rates to move there, maybe make a small pullback again, and then take off again. Let's take a look at some of the foreign markets. Germany is a pretty key market, and you can see that Germany is just dancing along this trend line here. It's had a couple breaches, but it's starting to look weak, and potentially, if the Dow and the S&P and the Nasdaq move up next week, you can see Germany move to new highs. Maybe not as high as this, I don't know, but certainly new highs, maybe slight new highs. And Japan, we should see Japan moving into this zone of resistance that we've drawn here. It looks stronger, but remember they're printing a lot of money in Japan, and so therefore money's cheaper, which makes assets appear to go up. If we look at the UK, and I was having trouble getting NinjaTrader to pull up, so we won't be looking at the FTSE later. I might be doing some maintenance on that trading program. So, but you can see, the UK is broken in kind of a shorter term diagonal trend line and still hasn't gotten above it. So we might not actually see these resistance levels. We might just see the UK kind of slowly drift lower here, and then at some point accelerate pretty rapidly. The global Dow is still, down. It's probably not going to make a new high. I don't know. It's looking a little stronger than it was. All these could make new highs. They're certainly close enough. The Wilshire's probably going to make a new high. You can see I've got a new high marked in the chart here. But again, if you get a close above this, it's probably going to go up into this 22,750 area. And then, the euro, US dollar, we'll look at the dollar here in a minute, but it's really kind of in a no man's land. It could go, you could see the dollar move, the euro move up into this 1.16 area, or you could see it roll over here and go to new lows below 1.05. So it's really kind of in between. It's hard to, it's a little bit easier, let me show you what I mean, why it's hard here and so on and so forth. It's a little easier at this point right here to kind of talk about the euro, because you could take a position here, and if it pulls back, say to here, well, you're wrong. But when it's in the middle, where's your resistance area? Your resistance area is right here. And where's your support area? Your support area is down here. So see how that's right in the middle? So, it's hard to say which way it could go. Now, what you could do is you could sell some calls up here, and you could sell some puts down here and collect some premium in the meantime. But that's really all you could do. Or you could go to a shorter time frame. You could look at like for the weekly, we would say, okay, it's hard to tell what direction the trend is. But if you went to a daily, okay, well, it's still hard to say, but I would say that the daily is telling me at this point that the shorter term trend is to right here. So then you could go from a daily to say a 60-minute chart. This is how it's done, basically. Well, I'm not going to be able to see that. I was going to show you. It's hard to do in profit charts. Let's look at 3 month. Yeah, I can't get. I'm not going to be able to get the scale correct. But you can see here, if we were able to go to a 60-minute chart, then we would look for, a reward to risk down to this area. And then if it got to this area, then we would look for it to bounce probably in an area just above this high. And this is how the market fluctuates. It fluctuates at very small degrees of trend, and then those fluctuations build larger and larger degrees of trend. I don't know, that may be too complicated. You might not be able to visualize that. That's something that may be a little bit difficult to visualize, so I won't go into too much detail there. Maybe we'll do that on another episode. That's really it for those markets. Let's look at the dollar, and then we'll look at gold. Here's the dollar long-term chart, and you can see the dollar's been chopping around. Now, to me, at this point, it looks like the dollar, this looks like, this could have been complete here, this corrective move. Let me kind of use our tool here, and I'll show you what I'm talking about. This corrective move right here, from here to here to here. That last one was bad. It's to here. This could have been the corrective move, but then this also looks very corrective. So you could have one of these things where you have this kind of chop, chop, chop this way, and then you got chop, chop, chop this way, and now we're proceeding with a new move down this way into this area here. So I would look for the dollar to move to a kind of a new DP area. Let's see if we can, let's just take this. Well, for some reason it's not letting me grab that. There we go. Let's just take this and now move it into this area here. This is very arbitrary what I'm doing. It's a zone, right? It's a zone of support just below this low. Think of the way you got to think about this. Let me draw some lines on here for everybody to understand. The market moves from pivot to pivot. Okay, so here's a pivot, and then here's a pivot. Oops, it's not grabbing a hold of that point. There we go. Here's a pivot, and then here's a pivot. Okay, and you can see how the market does this. And then here's a pivot up. Okay, and then a pivot down, and then a pivot up. I guess this one right here would be it. So you can see from this pivot, we could have drawn a DP, a decision area of support, say right here. I don't know that I would have drawn it that fat, but then the market came down to that, right? And then off this pivot, you can see that we would have had a decision area in this zone right here, which it basically went to. So what we're looking for then is we're looking for now the market to move down in a new pivot. As it pivots here and goes lower, we would look for the market to go down into this area here around 92, I don't know, 92 and a half, 92 to 92 and a half range. And then the dollar would probably reverse and begin to go higher again. Now, if you look at gold, gold should be just the opposite, right? The market doesn't move perfectly with gold, but in general it correlates just the opposite. So you can see here on gold, we came down and made a low, and I don't know how long ago I drew this, but I drew this a while back, and I drew it off. This last low here. So I took it off this low and put it right there. And it's just, I don't want to say it's luck, because it is your eye noticing a place for support. But whether it just touches it, goes into it, or goes past it and then reverses, that part of it's a little bit luck. So there's you just have to over time you get used to looking at these charts, and you get a little bit better and better over time, making those estimates. Crude oil, again, here's another support area. Now, what we're looking for from crude oil, though, just because it's in that support, we still want the market to confirm what we see, right? So, I mean, you could buy right here at support. In fact, there's a lot of people that do. A lot of people say, well, that's support, so I'm going to buy crude oil and I'm going to go long. But really what we want to do typically, just to minimize our risk over time, is wait till the market tells us that that is support. And the way it's going to do that is when it closes above this low day, the high of that low day, or that low week rather. And when we get that, then we can probably say crude oil has stopped going down. Now, what do you do there? Well, there's a couple things you can do. You can just hop in right there and say that's the new trend. Or a lot of times what will happen is it'll go up, probably into one of these moving averages right here, like this one or this green one, and then it'll come down. But when it comes back down, it'll make a higher low. See, this is higher than this low. And then as that turns, that's where you might want to get in, and then it's probably going to do that. So these are the techniques we use to get in gear with the trend. Of course, the earlier you get in gear with the trend, the more likely that the more times you're going to be wrong. If the more confirmation you wait for, then the more you're going to be right. But the more risk you have to take to be right. So that's just how the market works. I don't make the rules. It may not be appetizing to you, but that's how it pretty much works. So, the interesting thing to me for this week is going to be the 10-year Treasury market. I'm going to be watching these interest rates very closely, and I'm going to be looking for, a close next week above this 22.5 area. If we get interest rates closing above that 22.5 area, probably going to start looking for long positions in the 10-year Treasury. And the way you can do that is there's an ETF called the TBT. Let me pull that up and I'll show you. The TBT basically mirrors interest rates. And you can see here I was kind of fiddling with it, trying to find a good place to get in. And I actually got in. Where did I get in? I think like right in this area here. And it ran up and I was making some money, and then it ran back down. And when it came up like this and failed again, I got out, like right in this area where this line is. So, and lost money, and that's just the way it is. But if next week we see the TBT, if I see the TBT, let me just draw a new line on here. If I see the TBT move above this area right here, which would be 45.23, if the TBT closes above 45.23, I'm probably going to get in gear with this trend and start going long. And I'll look for probably a good stopping point, a good place to either reload that trade would be, for me, I either reload it because I'm buying options, or I just step to the sidelines, wait for a pullback, and re-enter. Once the trend changes, I just trade in the direction of the trend. I don't trade counter trend. If you trade counter trend, it's very, very difficult. You can lose a lot of money doing that. I wouldn't recommend doing that. You want to be in the direction of the trend. The key is trying to figure out when the trend changes. And I think crude oil is a place where the trend is nearing a change. I think the interest rates are a place where those are the two areas where I see the trend changing probably within the next week or two. And those are representing immediate opportunities. That's about it this week, guys. I really appreciate you coming in and continuing to view the show, the video. Hopefully you'll tell your friends and family about it and let them know what we're doing here and encourage them to come in. Even if they don't come in every week, just come in every now and then and kind of see what things look like. A lot of people don't care about all this detail that I'm getting to, but I do want to explain why I'm saying what I'm saying, and so that's one of the reasons I get into the detail. But anyway, that's it for this week, everybody. Take care, all. Have a good